Crypto Hotep here with another investing video. We are on week 880. We are on week 80, the big 80 of the family portfolio and dividends tracker. Now, if you're unfamiliar with these videos, go to week number one, go to the channel, and then go to week number one, and then that's where I go over my whole methodology, why I'm doing this, basically my thought process behind buying the stock, so forth and so on. And I'm trying to cut down on my intros to just get right into the good stuff, which is the video. But before I begin, none of this is financial advice. Please do your own due diligence when investing in stocks, crypto, metals, anything of that sort. Please DYOR. With that being said, guys, we will jump in, but before we go to week 80, we always look back at week 79, and week 79 saw us with a nice green return and a nice balance of 32.50 and 60 cents. A money weighted rate of return year to date of 15.04%. That equated to a market gain of $325.15 and dividends earned of $24.28. Now, before we go the into week 80, the big news this week was CPI news. Now, CPI news, the reason it was big, consumer price index is always huge, always on everybody's mind. But this in particular was very interesting because, for one, it got released on a Friday at the end of the week, which it normally doesn't. And then, second, is there's still a government shutdown. So we were able to get the report on this, but we can't get the reports on other items. So it was a little bit odd. It was a little bit odd, and I was already guesstimating that that CPI would be down from the forecasted rate, only because we were privy to this information. If the CPI rate was abysmal, then we wouldn't have been able to get this report, and they would just blame it on the government shutdown. So we did get it. So I already assumed that the year over year rate and the month over month rate was pretty good, and I was correct. As you can see here, CPI came in at 3%. The forecasted rate was 3.1%, so it came down. That's bullish for risk on assets, things like metals, things like stocks, things like crypto, even though it increased from the previous 2.9%. If we go down here, you can see kind of the trend. There's a 5-year time frame here, and just showing, theoretically speaking, since 2020, we have drawn down the CPI rate, so the consumer price index. The rate itself has actually gone down, and it's actually alarming. If you look at 2022 CPI was 9.1%. The inflation rate was 9.1%. That is insane. We were living during those times. It's crazy. But if you look at it here, um, as we talked about, the actual from September was 2.9%. Even though we went up, what we care about is the forecasted number. What are people estimating? And then if you come below that estimation, we're all good. Okay. Remember, the markets don't like surprises unless they're good surprises. And having a decreased inflation rate is a good surprise. Okay. So, with that said, guys, we will jump into week 80. How did that affect the markets? Well, you're about to find out here. So, week 80, it saw us with a boosted balance here of cracking $3,500. Another milestone right there for the family portfolio. So our balance is $3,509.67. A money weighted rate of return of 17.71%. That is not too shabby. Dividends earned of $24.53. Market gain of $389.35. So what went on here? So we'll go from the activity from last week to this week. So from last week, we already spoke on this, but from last week we didn't have any dividend activity, but look at this. So this week we had a lot of deposits. Okay, so we had a lot of deposits. We had our regular $15 deposit that we normally do. And if you're unfamiliar, again, watch week number one. It's in the channel. And then we were blessed We were blessed with another deposit of 150 bucks here. And guys, again, really quick to dovetail, if you are unfamiliar with this account, and I'm going to go to, this is your first time watching the video, we'll look at the 1 year chart on this account. So in 1 year time, again, we went from 1326 and we're now at 3509. And that's all based on small incremental deposits into well-established companies and just letting the markets do what they do. Okay. But so we were blessed with 150 bucks and then obviously $15 here. We did have some buys here as well. So we did buy with that deposit. What did we buy? We bought a lot, right? So we bought Starbucks, Visa, Moody's, Sony, Target, Pepsi, Google, McDonald's, Costco, Microsoft, Apple, O Realty, and Amazon. Amazon, that's a good purchase right now. Okay, so let's go to our portfolios. And as we always do, guys, we go bottom to top. Let's see who's at the bottom today or this week. So our middle is at the bottom, but our middle has significantly improved on the portfolio. So our middle on the year-to-date front, year-to-date, we're looking at a balance of $440.65, money rate of return of a positive 8.75%, dividends earned of $2.62, and a market gain of $21.26. As of right now, if we look at just spot check this, Amazon has not been doing well in our middles portfolio, but it is showing glimpses of life. I think that Amazon will start taking off now. They've bottomed out a little bit, and out of the Magnificent Seven, which if you're unfamiliar, Magnificent Seven is basically the best seven tech stocks such as Tesla, such as Amazon, Microsoft, and such. Um, they are the only one out of that Magnificent Seven that is actually in the red for the year, not just for the month, but for the year. So Amazon has been sleeping a little bit. So I think the beast has awoken, if you will, so or awakened, if you want to say. Target is still Achilles heel, down over 20.5%. Costco actually down a 1%. Not really worried about that at all. Tesla, we are up 31%. Google, we are up 81, almost 81%. Starbucks down over 5%. And then Sony's had a great year in our middles portfolio, up over 28.5%. How I feel about these stocks currently is we're not changing anything with our middle. Even with Target, I want to see how Target's end of year shapes up. Okay. Our youngest, let's go to our youngest. Our youngest is almost cracking 500 bucks. That's amazing in stocks. $494.12, 18.82% year to date. Money weighted rate of return. Love to see it. Dividends earned only $1.56, market gain of $54.86, and a very simplistic portfolio. Only 5 stocks and some of the best stocks there are. Tesla, great, up over 29%. Apple, up over almost 19%. Starbucks, as with our middle, down over 4%. Not really worried though. We've closed that gap on Starbucks. Sony, up over 34%, and then Costco, up over 2% here. Not really worried about our youngest portfolio either. Very good selection of stocks and very simplistic, very easy. Next, let's go to my wife's stocks. My wife has cracked $500. My wife's stock, if you've been following these updates week over week, you know when my wife's stocks were at like somewhat of a standstill and just they were bleeding a lot. It was in the red, it seemed like every week, in the red at the bottom, but we didn't do anything. We didn't adjust any stocks, we didn't sell any stocks, we didn't add more. We just stayed true to the stocks that we chose initially. And we are receiving the fruits of those labors right here. So year to date, up over 63.48%. Balance of $513.45, cracked the $500 mark. Fantastic. Dividends are $2.42. Market gain of $139.79. That money weighted rate of return here is insane. Um, And just like our youngest, a very simplistic portfolio of only four stocks. Google, you can never go wrong with Google, up over 67%. 67%. Pepsi, even Pepsi's in the double digits right now, up over 13%. And then Celsius, probably one of the best stocks in the portfolio, up a staggering 150% plus year to date. And then Tesla, just coming in with a little measly 43%. But just crazy portfolio here, crazy year to date numbers. It's fantastic, fantastic performance this year. Let's go to our oldest. Our oldest has also hit a milestone, over $1,000 in stocks. Our oldest, over $1,000. That's crazy. And the reason I'm so like gung ho about this is because we're not making huge deposits into these accounts. Yeah, we may have a deposit maybe once a month, once every 2 months, that's a little bit more than that $15 deposit, such as this month. But for the most part, we're very consistent with those small incremental amounts that we deposit to show that generational wealth can be built. It takes time, but it can be well built over time if you select qualifying and very good ran businesses. So our oldest has cracked the $1,000 mark, crazy, with a balance being $1,025.44, money weighted rate of return 9.35%. Dividends earned of $4.72. I really think that the money weighted rate of return is just starting because this is a low. I think we're gonna get to double digits here. So Apple up over 12% on at 12.5% on Apple. McDonald's, which just upped their dividend as well for over 20 years now. They are a dividend aristocrat, up over 7.25%. Costco down, but not really, again, not worried about that. And then Tesla up over 15%. What I'm going to tell you is watch out for Costco. Costco's going to carry this portfolio into the double digits for money weighted rate of return for our oldest. And the last but not least, my stocks, I did crack the $1,000 mark as well. Year to date return of a positive 15.74%. My balance is $1,036 and a penny. Dividends earned of over $13 and a market gain of $104.09. For the most part, the strategy here, especially with this buy, my strategy for this buy is I wanted to add more to O Realty, which we did. If you saw, we did buy some more O Realty. Dividends earned of about $3.85. My money weighted rate of return is positive 8.42%. That's all I really want out of my real estate sector here. Okay. I believe we did add some Microsoft here as well. Not really worried about that. I'm up over 93% on Google, up over 18% on Microsoft, totaling my money rate of return for technology sector up over 46%. You're not going to do better than that. I'm not mad at that at all. Um, what else did we buy? Let's look at this really quickly here. Let's go to our trades here. We did buy some Visa. Visa and Moody's are mine. Microsoft is also in there for me, and then O Realty. So um, we did have several buys. So I did try to stay to the finance side here. And the reason I did is because I looked at the allocation with M1 Finance. You can set an allocation target right here. And then what the bold is the target, and then the non-bolded font is where you are at currently. So I decided to add more finance on there because I'm only at 19.2% on the finance side. And then also with real estate, I'm almost cracking 15%, but not quite. So I wanted to add a little bit more there as well. And then technology, I just wanted to buy some more Microsoft, to be quite honest with you. I just wanted to buy some more technology pieces because I do like that. But all in all, my portfolio is doing really, really well this year. Looks really good. I'm happy that we cracked 1,000 for our oldest, which is great. And then also my wife cracking 500 is fantastic. And then our youngest is on the verge of cracking 500 as well. So with that being said, guys, feel free to like, subscribe, comment. Let me know what you think. And as always, thank you and happy investing.